Rohr here with an early concise highlight on Thursday, May 28th, 2015. It is currently 7:45 a.m. U.S. Central Time. Coming to you a bit later than usual because we wanted to wait and see the U.S. weekly initial jobless claims, which were in fact a bit up this week, but still into relatively low levels in the upper 200,000s. And also, we wanted to mention that the energy markets are under a bit more pressure. Crude oil is back below 58. Now, this is important both as a sign of the overall economic condition and as a positive influence on the government bond markets, which suffered so heavily when the crude oil pushed above 58 about a month ago. This is going to be very interesting and also a sign of some weakness maybe for the equities. So what does all this mean to the markets? Well, yesterday, evidently, the somewhat weaker data didn't mean a whole lot to the S&P 500 because it came back from the Tuesday crunch, coming back in from the holiday weekend, which was a holiday in a good bit of the rest of the world, and gapped down to break out of this channel from 21.22.5 on Tuesday. Then subsequently dropped back below, and we'll expand this chart to show the importance. The old all-time high at 21.19 and the important congestion below it in the 21.12 to 15 area. And all that occurred even within the first 15-20 minutes. It didn't even take the first hour for this to fail. As we can see on the 30-minute chart, it was below it, well below it before 30 minutes into the day. That set up a test of the lower support in the 2100 area, where the extended support starts to come in at 2090 to 88, and it's important because it also was back into this old gap down to about the 2094 area that it never quite got to. Rebounding throughout the day then, after a gap higher opening on Wednesday, it pushed up back through 2112 to 15. That was not really that critical, but back above 21.19 looked pretty good again, but ultimately getting above 21.19.20 only managed to stall on a slight squeeze above the 21.22.5 down break from Tuesday morning, the channel down break. Currently, this market is off 5 down at 21.16, and as you can imagine, that's pretty critical, because considering that you, again, broke down from 21.22.5, you're back below 21.18.19, the gap into the old high here. Can you get back through that meteor congestion between 21.15 to 12 on the downside? If so, you could attack pressure again, and it's interesting that the channel coming up into lunchtime this afternoon comes right up around the 2096 trading low from Tuesday, and that also now, as we get out later today into Friday, that area somewhat below 2100 is also channel support. If the market instead should decide to get the bid back, push up more aggressively above 2122 and 2125 area, it might be good again. And in that case, we expect to tack on last week's quiet trading range high up at 2132 with bigger oscillator and topping line resistance in the next week up into the 2150 to 60 area. So big decision here late this week into all of this important late week data. You'll also note that the hourly MACD, while it improved quite a bit, did not get even to, much less above its upper runaway band. And while the 30-minute MACD got out above that band, if the market indeed opens 5 lower and weakens at all from there today, it's going to be back below it, which is going to look like a bit of a failure sign. And that pretty much does it for the short-term view of the S&P 500.